The Bank of Japan kept monetary policy on hold at its final policy board meeting under Governor Shirakawa, setting the stage for a change in leadership widely expected to adopt more aggressive easing measures. I'm joined down the line by Wagner, Economist with Commerzbank, to discuss. So Marco, the central bank voted down a proposal to step up monetary stimulus, saving ammunition for new leaders who are expected to take bolder action to try to end nearly 2 decades of deflation. What would you say are the main reasons behind the decision to hold off?
Well, this just hits the point. The current policy board indeed saved the ammunition for the new leaders, and they will actually need it, because market expectations are extremely high at the moment, and this makes it all the more easy to disappoint the investors. Now, the new policy board will need all the power to convince investors of their more aggressive policy stance.
Some believe there is a possibility of 2 consecutive rounds of easing at the April meetings of the policy board, but there has been some talk that the BOJ needs to act big to meet markets' expectations and therefore may deliver stimulus even before these meetings. But what do you think?
Well, we learned from the candidates' speeches before the parliament that they first want to use the established instruments such as the asset purchase program, but at a larger scale and in a wider scope. So this, however, limits their set of instruments. Therefore, the new board will have to carefully distribute their measures over the next policy meetings, and I even think they will deliver most stimulus at the first meeting at the beginning of April, and they will save some for the end of April. And additionally, they might even carry out some measures in May just to generate a sustainable confidence in the market.
The Bank of Japan revised up its assessment of the economy, saying it was bottoming out, which is slightly more positive than last month's view that the economy appeared to have hit bottom. In terms of fundamentals, would you agree things are looking up?
Sure. So more and more indicators show that Japan's economy has bottomed out and will start to grow again in the very first quarter this year. Just to mention a few indicators, the industrial production, for example, increased in January for the second month in a row. The purchasing managers index strongly increased in January and February, and also the consumer confidence surged with the beginning of the year and has even reached a five-year high. So this surely suggests a brighter outlook in the coming month.
Shirakawa challenged Kuroda's argument that the central bank needed to focus more on fostering inflation expectations to end deflation. He told a media conference, in a case where we rely mostly on inflation expectation, this would prompt a rise in government bond yields, reducing the price of JGBs held by financial institutions and thereby hurting the financial system. But which side of the fence do you sit on?
To my mind, the whole discussion on deflation and Japan's alleged lost decade is completely misguided and, to my mind, just wrong. So first of all, in per capita terms, Japan has showed similar growth in the 2000s like other major economies like France and the United States. For example, from 2000 to 2012, Japan and the US both expanded by almost 9%. And second, the slight decline in the prices over the past 15 years has not harmed the economy indeed. So since the wages have also fallen simultaneously together with the prices, the companies were able to maintain the profit margins and thus the basis for investment. So from an objective economic perspective, one simply has to confess that these years are in no way lost. So there has been no downward spiral to deflation, and hence this cannot be an argument for even more expansionary monetary policy at all.
You've mentioned before that what Japan really needs is structural reform. The country is emerging from the economic crisis under a new regime, so do you think reform is on the horizon, and if not, why not?
Well, I do not think that there will be much reforms, because over the past 50 or 60 years, the party of Mr. Abe has been the leading government party, and they are. People do not really know them as a reformist party. So, to my mind, I do not think this will happen in the future at all.
During his nomination, Kuroda acknowledged concern over the seemingly deliberate depreciation of the yen. He said the Bank of Japan were not targeting currencies, but by trying to achieve their price stability goal, currencies may be subsequently affected. With that in mind, what is your outlook for the yen moving forward?
The yen has already depreciated against the dollar by about 15% since November. as investors anticipated the policy shift by the new government. In addition, now the monetary policy should become more expansionary in the coming years, and this will exert further devaluation pressure on the yen in the medium term. So I therefore expect the dollar-yen rate to be around at 100 at the end of the year 2013.
Marco, thank you for your time and insights today. Well, that's all from me, but click back to Dukascopy TV to find out if inaction is really the word of the day in terms of rate decisions from both the ECB and Bank of England. Bye for now.